All right, gang. So look, let's talk about something very serious. You hear us joke about it all the time, and we kind of tongue in cheek, but there's a reality to it that's really, really scary. And what it is let's talk about the mainstream media, okay? And the life and crimes of CNBC. I'm going to show you a perfect example today, okay? Let's start at CNBC. Let me share your screen. So we had two important reports this morning, right, guys? We had our inflation report, which was about 5%. And that kind of makes sense, right? We're coming off a zero balance economy. It's only normal that consumer prices jump, especially with what we've had happen with oil, right? The price at the pump. And that fuel, right? There's fuel involved in production across the board, right down to putting that burger on your plate, right? And so it makes sense. But what you don't see here is the other report, right? We had a labor report this morning, and that labor report this morning was actually pretty good. Let's pop on over to, let me pull up a page here. Let's pop on over to Market Watch, where we can see the calendar and the actual numbers. You had this happen, right? You had this happen. You look at CNBC right now, right? All kinds of stuff about consumer prices and inflation and everything else, but not one article about the labor report. And it's just one, it shows something really important. It shows that how either these guys just don't understand economics and they're just blind, or they're just so ignorant towards the news because they're on an agenda, right? Fear porn. What makes you click things? What makes you help those ads and stuff with CNBC? What makes them look better, right? You click on things. People don't click on normal stuff, right? They want to click on fear. Let me show you what happened this morning, okay, guys? And this is just the first phase of the life and crimes of CNBC, and only one half day. So we're now at 7 a.m. Hawaii time. So we're coming out of lunch in New York. And again, we still have no articles about the labor report. And here's the thing that they're missing. If you had woke up this morning before the market, you would have seen red futures. And then you would have seen that inflation report, and you probably would have panicked sold, because you're thinking, oh my God, now all of a sudden valuations and things like that, earnings growth going forward, whatever, just fear, right? And so you start selling and stuff like that. You start making mistakes, but you missed the report that came out at the same time. We've been talking about it for 3 weeks, right? What we wanted to see was the initial jobless claims is progressing nicely, right? We took another 10,000 lower on the new job complaints, but we've been talking about the continuing claims need to start lowering, and that's what's going to be your economic formula going forward. And you see it, right? We got all those people. We went from 3.76 million on continuing claims to 3.5. That's 0.26 million, right? About 260,000 people that are no longer collecting unemployment. They are collecting paychecks, right? So think about this, guys. Seriously, think about this. What is one of the best defenses that an economy has against inflation? Paychecks, labor growth, right? For God's sakes, it's 1 + 1 = 2. But you don't see any of that. Nobody on CNBC rationalizing this, saying, look, one of the biggest things you have as a defense against inflation, and the Fed knows this, they're just not saying it, is that labor growth, people going back to work. You're starting to make more money, right? You're starting to make legit money, and you're starting to make consistent money, right? And now all of a sudden you can afford a little bit more at the gas tank. You can afford a little bit more at the grocery store. You can afford a little bit more. And then you also saw too an important report, and that was this. Let's pop on back to the share screen here. If I can find the button. Let's see. You had your household wealth. It went up. It went up big time. Now, what is that? Why would that happen? Guys, ask yourself, why would that happen? Well, guess what? The market's doing well. One of the biggest generators of wealth in households is market gains, right? Most people have 401ks. Most people, and you see it with the Robinhood movement and stuff like that. The Reddit movement, right? These are new investors coming in. I've always talked about Robinhood in this Reddit movement. It's not a bad thing in the sense it's bringing new investors into a world which is wealth generating through smart trading and smart patience and stuff like that. But one thing I don't like about it is we're not properly educating these people. We don't want them coming into the market and start becoming investors and wealth builders and things like that. And they think that everything's a meme stock. That's not the way to make money, right? Long-term visions, good balance sheets, strong dividends, things like that, right? We've proven that in our service time and time again. What happens is, right, you had this wealth gain in wealth, right? And now you've got more people getting off unemployment, off the government tit, right? And onto their own self-supporting and things like that. It brings pride to the worker, right? Don't you feel better when you make your money and you've earned it and you're going to go out and spend it and you're going to have a good time with it, whatever you're going to do with it, invest it, you know what I mean? And you've earned this on your own rather than sitting on your ass and getting a government check. Now, that's good for some people, but those some people, trust me, if this market and this economy explodes, they're going to still be doing the same thing, okay? That's fine if that's you. You're watching the wrong show. I'm talking to you wealth builders out there. You want more from life. You want that feeling of pride, right? That feeling of success, You don't have to be Warren Buffett to feel that. You start with $500. And then a couple years later, you've got $15,000. That really feels good, right? And you did it through the stock market. You didn't have to go to work. All you had to do is put a little money in it, position it correctly. But that's the crimes of CNBC. And then we just had another event, right? And this is another one. Show me anything on CNBC right now. Let's pop on over to CNBC. Show me anything about this move down we had in oil. We had about a 15-20 minute crash in oil. Okay, it was easily trading over $70 and it popped down. If you look at it, you can see in the chart, let's go to the day chart. This thing just hit a flash crash. Look at that, right? It was about 15 minutes of hell, but it came right back. Show me anything on CNBC that tells you about this, even mentions it. Much less explain it to the new investor, much less explain it to somebody who's coming to CNBC based on their moniker, we'll make money for you. Yeah, you may make money for yourselves, you little advertising bastards. Anyways, and so here, let's pop on over to a chart of, say, Suncor. You guys know we're in Suncor, right? This is what happens. You guys, you see this and people don't know what's happening, right? And so you sell your Suncor at 24, maybe 24.80, right? And that's your oh shit moment. Oh shit, why did I sell? I'm right back over $25, right? Come on, MRO was the same way. MRO, there's your oh shit moment, right? Oh, why did I sell at 13.27? I'm already right back at 13.54. Let's look at something a little bigger that's a little bit more mainstream in portfolios. ExxonMobil, right? Oh, that's not ExxonMobil. Sorry, guys. Some exotic thing. ExxonMobil. Imagine if you're in ExxonMobil and you tapped out because you just don't know what's happening, right? You turn to the news, they don't mention it. You go all over the internet and you just can't figure it out. And so you panic and you sell, right? And boom, you would have been right back up there. Again, the crimes of CNBC are ridiculous. You know what I mean? People always, I've actually had comments about how when I use CNBC screen, when it flashes that thing, support us by allowing ads, and I say no. I'm not giving these guys a penny of my money because let me tell you, if I traded based on their advice, I'd be broke right now. I would definitely not be on the Instagram or YouTube, wherever the hell we are. We're on some social media. But, you know, you think about it, guys, it's just criminal. Yesterday, we watched Jim Cramer saying, you know, I'm okay with the GameStop and AMC at the price it's at. Really? Are you buying it? Are you buying it, Jim Cramer? We don't want to hear the mealy mouth stuff. Make a call. You know what I mean? Plant your flag, stand by it. And you just don't get that. And it's so ridiculous on CNBC. Some people ask me, why are you so loyal to Charles Payne on Fox Business News? Because the guy doesn't talk out the side of his mouth. The guy is very, very clear. And you know what? The guy puts his money where his mouth is. How many times do you hear this guy on national TV on a huge show that many people watch? And he'll literally go, I made some money on DDD when I was watching his show. He had some analyst on that was talking about it, and he straight up said, I bought a little for my portfolio. That was good enough for me. I added a little bit, and about 3 weeks later, I was selling that thing at 100%. That's advice you can trust. So the main message here, guys, is don't get latched onto the media, because the financial media is no different than the mainstream media. It's all agenda based. Nothing matters but the click. Okay. Your money doesn't matter. Your livelihood doesn't matter. Your sanity doesn't matter. What matters is the click. So don't get bite into that. Okay, guys. I just wanted to talk to you guys about that up front. So as far as the market's going after that bad inflation report this morning, you know, the market's a little bit smarter than CNBC, and you see it. We're pushing to new highs right now. It was able to put 2 and 2 together. Yes, we had this burst in inflation, but there were reasons behind it, right? And also, too, we had this buffer, which is called labor growth, right? And you're starting to see wage growth, too. I think it was last week or the week before we saw the wage report, and we know wages are growing, too. So it's not just things are costing more money, which is your fear porn. It's also, too, people are back to making money, and they're making more money. They can afford to spend more. You might think about this like this. You might have this, I guess it's a progressive point of view. Well, things shouldn't be that expensive to start off with. Well, sorry, that's the way life works. You know, you want a gallon of gas, you got to pay for it. Sorry. You can go ask the government for it, and maybe after about 13 years, they might give you half the money. That's just the way the world works right now, guys. So look, we're still in the MRO. We're still in the Suncor. We just started opening the MRO. We talked about a couple of days ago. We've been opening that position over the week, and it looks like that buying window's closing. So if you guys are following along, that's adds a little more urgency to getting that on your board. The Suncor, we're all the way out to September. We're at the $25 strike. It's over $25. We're not panicking with that. We're up almost double digits on that trade, and we've got much more to go. We'll stick with that. We've got the Q trade. We could have panicked this morning, right? We could have panicked this morning and said, oh my God, man, if inflation is coming, valuations come into play. We know where the weakness is in valuations. It's in the NASDAQ. We would have panicked. Well, guess what? Your Qs are trading high right now, right? Let me check the Qs just to make sure I'm not lying to you like CNBC. Hey, those Qs are pushing 340 right now. The day high is 345. So nice little wash there. Got rid of the weak hands and all the CNBC fans, right? So we'll stick with that Q plays. It doesn't expire till Friday. They're just next Friday, and they're basically break even. And we don't have really any headwinds as far as the news goes until Wednesday, right? When we start getting like the Fed meeting and things like that. Then of course, Thursday we'll have another labor report. But, you know, be a little bit smarter. You don't have to be the smartest person in the room, guys. You don't have to be the smartest person in the room. Just don't be the dullard. Okay. And don't be the lemming. Don't just follow people. Listen and learn and make decisions on your own without the CNBCs. And that's all I wanted to talk about for that. Like I said, we're still in the energy play, and we'll stay in that for right now. You know, you're starting to get these, consumption problems. Are you kidding me? Are you kidding me? How can you in any vein, talk about a slowdown in consumption in oil right now. You have a major economy in India. You have a major economy in Japan that still aren't even participating in the consumption. This run is based on the U.S. and China, and the rest of the world's not even participating. The Eurozone, right? But these things are starting to resolve in there, and when they come through, it's just going to kick that consumption even more. That is one of the most scary lies I hear right now when I'm reading things on the internet, is when people start talking about a slowdown in consumption. Maybe it'll flatline while the rest of these economies are catching up. But by no means are you seeing $60 oil for a long, long time. In fact, you're going to see $100 oil a long time before you see that. The chart says so. 76 is the breakout for the next breakout towards that run for double digits. So, and you can see it, the market's reacting, right? The Dow's up about 150 points. The S&P's up about 25 at an all-time high, right? On this bad inflation news. Explain this to me, CNBC, with your doom and gloom on the inflation report this morning. Why is the S&P at an all-time high today? I don't know, fools in their money, right? So we'll stick with that play, and we'll let this Q play work out a little bit, because we know the market's gone back into this bullish tone, right? The NASDAQ's almost up 100 points as we're speaking. And we'll see how this works out. That plays right at break even. So we'll probably, it looks like we'll probably get 50, 60, maybe 70% out of this, right? Not bad for being patient, right? Not bad for not biting into the news. The crypto world was the same thing, right? We talked about it the last 3 weeks since that big sell down. All of a sudden, every little crypto news was just life-changing, right? No. Crypto is still a bullish thing. Crypto is still something people want to own. It's funny, in all this crypto chatter, what you're seeing is Interactive Brokers right now is about to let their players buy and sell crypto through their brokerage. And that's huge, right? We all know IB. Everybody knows a couple people that are on IB. We got a couple members, and those are your guys that really trade and stuff. And you bring those where they can just click and go on cryptos, and you're going to bring a lot of volume. You're going to bring a lot of interest into it. There's nothing wrong with cryptos right now. It's funny. The funniest thing we saw today, and I'm going to close with this, guys. The funniest thing we saw today was somebody in the live room had mentioned to me that Elizabeth Warren had just put out a tweet, right, saying that she wanted to go full on regulation on cryptos. God bless you, Elizabeth Warren. I thought back in 2016 you were going to get money out of politics. Well, that's going to work about as well as your crypto dreams are. But the funniest thing that happened was right after that, Jack Dorsey unfollowed her on Twitter. I don't do Twitter. I don't watch Twitter much except for the news and stuff like that. But I can tell you, if Jack Dorsey of Twitter unfollowed you, you're probably on a death knell. And these guys are just starting to eat each other, right? Because Jack Dorsey the day before just came out and said that there was nothing more in his life important than to work on Bitcoin. So there you go. Clash of the Progressives. It's fun to watch. There'll be a Disney series on this sometime next summer. Anyways, guys, it'll be right after the mandolin. Look, guys, you have a great Thursday, okay? It was an interesting Tuesday. I know I didn't get too much into the stocks, but that's because we're still sitting on the energy play. We're letting these cues work out. We're looking for opportunities on the board, but we wanted to see how the market digested these reports this morning, and it looks like it's taking it well. And so we're back on looking for opportunities, but we want to be careful going into Wednesday of next week. We'd like to get out of these cues before then and maybe just have the energy plays on the board. If anything, going into that Fed announcement, we think this will be finally where the Fed starts talking about, at least starts mentioning tapering, because it's starting to really make sense right now. Look, be smarter than the media and make some money out there. Okay, guys, worst comes to worst, you can always tune into this show and we'll give you the straight shot. You guys have a great Thursday. Go enjoy your day. There's only a couple hours left in the market day. If your portfolios are set and stuff, do what we're doing as a service. We're just kind of stepping back, letting this rally work out a little bit, and we're about to tap out some profits. All right, gang.